What's up, everybody? Happy Sunday. It's Sunday, November the 28th, and about 6 p.m. here in Toronto. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview for the week. So before we get into that, I just want to thank everybody who's following me here from IG. As you've probably seen in my reel, I did mention that here I'm going to be posting a little bit more in-depth information just to piggyback on my reel and provide a lot more direction and why I'm making the comments that I am as far as the market conditions in my reel. Now, that being said, let's have a look at what happened on Friday, because on Friday we saw the markets drop about 2.5% across the board. Now, the main motivator for that was fear. Fear, not so much of a virus that is coming out of South Africa, but more fear of what the virus can do economically. So, in other words, we're concerned, or the fear is there as far as lockdown measures are concerned, as far as supply chain issues that can result of that, as far as employment numbers starting to plummet when we already know the economy is as it's horrible. It's cratering at the fastest rate ever. But the biggest fear, as I mentioned, is that we are going to have economic problems, not so much virus-related problems. Now, taking a look at this week, we did see risk drop quite significantly on Friday, and that's risk of a market correction. Now, that doesn't mean that the markets won't see a correction. It just means that the odds of them are very low. Also, it doesn't mean that volatility in the market is low, because volatility is actually going to increase as we enter December, because traditionally December is not a great month for the market as people sell for tax purposes. Now, that being said, what I anticipate for the market this week is that we are going to see a lot less fear and a lot more caution in the market, meaning people are going to wait and see what different governments and economies are going to do and how they react to this new variant that is spreading supposedly, and it's significantly more transmissible than the Delta variant. Now, saying that, I expect the markets to potentially pull back a little bit further this week. Now, I'm not expecting it to be prolonged by any means. I do anticipate that most of this market will be bought up at a discount, which it currently is at. And taking a look at crude being a major indicator of the Dow, which dropped quite significantly, and also you saw that same significant drop in the Dow on Friday. I think oil is not quite at its bottom yet. It's currently sitting about 68.5. It could very likely go down to about 66, but even then, it's not going to be a prolonged loss. You're going to see that getting picked up and bought up quite significantly before it pushes back up into that mid 75 range, which is where crude likes to be on the lower end. So right now, we are well below where it likes to be. Now, one thing we also want to take a look at are the yields in the US dollar. Sorry, I have a lot of notes here. So the yield in the US dollar. We saw yields come down quite significantly, and we also saw the US dollar come down. Now, I anticipate the US dollar will continue to see a little bit of struggle, but the yield should start to go back up again very soon, up until the 1.5 and a half range, which is where the yields typically have liked to be in the most recent months. Now, if we see that, we could see that stability help prop the market, or at least provide an indicator that the market is going to continue to be supported and will actually start to increase again. Because the truth of the matter is, no matter what, the Fed is going to continue to pump money, and that is key. The Fed will continue to pump money. Regardless of what they say about tapering, we all know already that the tapering was really just a reduction or a drop in their minimum threshold of purchases. They are still not changing the maximum whatsoever. So the minimum means absolutely nothing when they're not even operating at the minimum levels. So because of that continued printing of money, we are going to see the markets continue to move up, at least for now, until they stop. Now, if we take a look at other markets, we're going to have a look at precious metals, which is at a deep discount right now. We've seen silver really get hammered, as well as gold. But one of the biggest losers in the most recent market conditions from last week is actually the platinum palladium group. We have seen them take an absolute beating and are at a deep discount. So right now, for me, I'm taking a look at silver, gold, and platinum now as possible purchases for the coming weeks, and hopefully they continue to drop at least a little bit to help me and you in your continuing buying in the precious metals field. Now, if we take a look at cryptocurrencies right across the board right now, we're seeing a sea of pretty well red for everything. Bitcoin and Ethereum have moved back up into their most recent channel. Now, sitting in this channel is a positive sign as support has come back in. I'd like to see where crypto goes from here, at least the two big ones. I'm always a big believer now at least now in the metaverse. And so I am taking a look at metaverse related coins, as well as NFTs, which I am now exploring and will be more than happy to explain more as we go through these market conditions and continue with this YouTube post. Otherwise, I think, as I mentioned, this week is going to be a lot of caution. Continue to watch. I will be posting every morning still to my morning reel, just giving you a preview of the day and talking about economic news. And that's it for now. So I will see you tomorrow morning at the opening bell.